Today I would like to analyze Meta Platform, also known as the owner of Facebook, Instagram, WhatsApp, and Oculus. So they are the major company, and we can see the stock price increase close to 180% in the last 5 years. We had the big decline from 2021, so it was the bottom around November 2022. So then it's up from this time around, over 400%. So it's a big increase. And now the last week, we see a decline from close to 4%. So we want to take a look at the financials to find out if this company is actually undervalued or very overvalued right now. So the first thing we can recognize about Meta is a huge market cap of 1,310 billion US dollar. So it's a big company already, which can mean it becomes more difficult to grow in the future. We can also see they have a dividend yield of 0.39%, so it's not very huge, but probably it will grow in the future as well. So let's take a look at the financial foundation right now. The first thing we are looking for is revenue growth over the last 5 years, because we want to invest in a growing business and not a declining business. So we can see here in 2019 it was around 70 billion US dollar, and now in 2023 we can see it's over 134 billion US dollar. So we have the big increase. It nearly doubled, and we like to see that, so it's a check here. Now we are looking for free cash flow growth over the last 5 years. So this is a very important number, because the free cash flow is used to pay the dividend or to buy back their own shares. So we want this to grow. And we can see here in 2019 it was around 21 billion US dollar. And now in 2023 it was around 43 billion US dollar. So we see the increase as well. It more than doubled, and this is a very good number, so we can make a check here as well. Now we are looking for a free cash flow yield over 4%. So this can also tell us something about the valuation. So if it's under 4%, it could mean the company is overvalued right now. So we're going to take the number from 2023. It's here 43.85 billion US dollar. So we're going to divide this with the market cap, and then we're going to get the free cash flow yield. Okay, we get the number 0.03347, which means we have around 3.347% free cash flow yield. So it's not a great number, I would say. So it's not a check here. And it also means the company could be overvalued right now. We can also see here in 2022, the free cash flow was even lower. So with this number, it would look even worse. So now we have the better number, and it doesn't look even great right now. Now we're going to take a look at the balance sheet. We want to see the debt to free cash flow ratio under 5. This means the company can pay back the debt with the free cash flow in under 5 years. So it's a very important number as well, because if the company has too much debt, it could risk to go bankrupt. So we're going to take the short-term debt right now. Here it's 1.71. And then we're going to add the long-term debt as well. We can see here 36. So then we're going to divide it with the free cash flow. And then we get the debt to free cash flow ratio. So we can already see it probably a very good number, because the free cash flow is quite high compared to the debt. So the number we get is 0.86, which is a very great number actually. So they not have too much debt, and the free cash flow is good as well in this matter. We can also take a quick look at the cash on hand. So we see here they have 65 billion cash on hand. We actually can look the quarterly, so we're gonna get their more accurate number as well. So yeah, we see here quarterly they have a little bit less cash, so probably they use this to buy back their own shares. So this is a great number anyway, because we can use this money to pay the dividend or to buy back the shares or to pay the debt. So it's a great number, and here is a check as well. The last thing we're looking for is shares outstanding decrease. This means the company buys back their own shares, so this can increase the stock price. And we like to see that especially if the company is undervalued. So if the company is overvalued, we not necessarily like to see them buy back their own shares, but many companies do this anyway. So we can see here Meta did buy back their own shares a lot, especially since 2018. And the most they did buy in 2022. So this was a good move, I think, because at this time they were quite undervalued and now they're buying less shares back. So it was a good move. I think is a check here as well. Yeah. I would like to give a conclusion about this company. So let's start with the good things. They have a great balance sheet, which means they have a lot of cash on hand. They have less debt as well. So we like to see that. They have a growing business, so the revenue grows, the free cash flow grows as well. So one time we had the free cash flow decline, which also can be because they invested a lot of money in different areas. They have a dominant position as well, so especially in the social media, the most people use their products, so it's very dominant. Now they have more competition with TikTok and YouTube as well, so we have to keep this in mind. But I would say they have still the quite dominant position. So the negative thing would be low free cash flow yield. So they have the 3.34% free cash flow yield, which is under 4%, and especially now it's already a big company. So it means we don't know how much they can grow the free cash flow in the future. We have to keep this in mind. So that's why I would say it's a little bit low. So if it's a younger company and they have this free cash flow yield, I would say it's great, but already this company is quite big. So we don't know how much they can grow in the future. So, but we also have to say, if we compare it with the other companies, Microsoft, Amazon and Apple, so the free cash flow yield looks better in this comparison. So it's not too bad actually. But I also would say the stock price is probably a bit too high right now. We already have the increase over the 5 years close to 180%, and it could looks overvalued right now. But I would still say it's an interesting company. Can be a good buy in the future because they have the growing business and we like to see that. So I hope you enjoyed this video and please leave a like and subscribe to support this channel.